Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at MP Materials.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our analysis. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. We are talking about one of the most strategically important companies in North America right now. MP Materials is just fundamentally unique.
And that uniqueness, that's really the core of the whole investment thesis, isn't it?
It is. I mean, when we say unique, we're not exaggerating.
We're talking about geopolitical necessity here, right? This isn't just, another mining company.
Absolutely not. This is the only active rare earth mine and processing facility in the U.S. at Mountain Pass. For decades, China has completely dominated the supply chain for these critical minerals.
The very minerals that power pretty much all modern technology.
Exactly. So this facility, it's the foundational piece to building a supply chain that's independent of China.
That's the ultimate strategic moat.
Yeah.
I mean, we're talking about minerals like neodymium and praseodymium, NdPr.
Right.
These things are what let you build the powerful lightweight magnets for everything. Defense systems, EV motors, wind turbines, you name it.
And that's why the company's ambition is so huge. They're not just digging stuff out of the ground. They are building a full, mine-to-magnet vertical integration.
Okay, so that's the strategy. Mining at Mountain Pass, then metal production in Texas, and then the final step is the magnet facility.
The 10X magnetics facility, yeah.
That sounds incredible strategically, but it also sounds incredibly expensive. And while the strategy is clear, the recent financial picture, it hasn't been great.
That's the key point. We have to talk about the growing pains. If you look at the backward-looking data, it looks tough. I mean, really tough.
Yeah, a negative net profit margin of over 50%. TTAPS is, what, negative 66 cents?
Right. And if you just glance at those numbers, you might run for the hills. But you have to understand why the costs are so high right now.
It's the cost of building out that future, I assume, while also dealing with a tough commodity market.
Precisely. The cost of sales just exploded. It went from around 37% of revenues to a massive 94% recently.
94%.
And that's not bad management. It's the direct result of ramping up those incredibly complex downstream facilities, like the one in Fort Worth. They are spending a ton on CapEx and training and just getting things running.
And all that spending hit right as commodity prices for rare earths were compressing, which explains the revenue dip we saw, down almost 15% year over year.
So 2025 has clearly been the trough year. All the pain, none of the gain yet.
Okay, so that's the past. Let's pivot. This is where it gets interesting, right? The bullish inflection point.
This is where it gets really interesting because we're moving from that speculative phase into an actionable investment. Management is very confident they'll return to profitability starting, right now, Q4 2025.
That's a huge swing, not just a small improvement, but from deep in the red to the black in one quarter. What do the analysts think about next year?
The consensus forecasts confirm it completely. They're expecting the full year 2025 loss of about 21 cents per share to swing to a profit of 69 cents in 2026.
Wow.
And that's alongside an expected 83% jump in revenue. It's not a slow recovery, it's an acceleration.
Okay, but a forecast like that, it carries a ton of execution risk. Something fundamental must have changed to de-risk this whole thing.
It has. That's the crucial element. Government backing. This is what separates a risky mining play from a de-risked national asset.
Department of Defense.
Yes. The DoD has stepped in with a price protection agreement. It kicked in October 1st, 2025, and it provides a literal price floor for their core NdPr products.
A price floor. So a safety net against a market crash.
It is. The floor is set at $110 per kilogram. So if global prices collapse, the government makes sure they still get that minimum price. It stabilizes their revenue right when they need it most.
That's huge.
Yeah.
And there's more, isn't there? Something about the finished magnets.
There is a separate DoD offtake agreement for the magnets themselves, the higher margin products, which even includes a minimum EBITDA guarantee.
So the government is basically backstopping both the raw material and the finished product.
They're a strategic partner, not just a customer. And that support is what lets the company spend what it needs to without, breaking the bank.
Okay, so they have support, but can they survive this multi-year build-out? What does the balance sheet look like? Do they have the runway?
They absolutely have the runway. The balance sheet is incredibly strong. We're looking at a quick ratio of 7.51 and a current ratio of 8.05.
And for anyone who doesn't stare at financial statements all day, what does a 7.5 quick ratio actually mean?
It means they have over 7 times the liquid assets they need to cover all their short-term bills.
Hmm.
They have a ton of cash and flexibility to finish the job.
And what about debt? Are they leveraged to the hilt to fund this?
Nope. Very moderate. The debt-to-equity ratio is just 0.43. They are in a position of strength, not desperation.
What's really interesting is that even while the P&L looks messy from all the spending, the actual operations are hitting records.
That's the key. Record NdPr oxide output at Mountain Pass. Record metal production at Fort Worth. The physical assets are already scaling up, even if the accounting hasn't caught up yet.
And they're locking in customers too, right? With partnerships that have high switching costs.
For sure. Think about it. They have a deal with Apple for magnets. They have a refining joint venture with Saudi interests. These aren't just one-off sales. They are deep strategic relationships.
So the strategy, the funding, the government support, it's all pointing in the right direction. And the market has definitely noticed.
Oh, it's noticed. The stock is up somewhere between 230 and 263% in the last year. It's just blown past the broader market.
And technically, it looks very strong, trading well above its 50-day and 200-day moving averages. That usually means big institutional money is buying in.
It is. Institutional ownership is over 52%. And just as important, short interest is declining. The smart money sees the government backstop and believes in the story.
So if the market is already pricing in so much success, what do Wall Street analysts think is left? What's the potential upside from here?
Well, the consensus price targets are clustered up in the $74 to $79 range.
Which from recent levels is another, what, 30 to 45%?
Exactly. The market is saying, yes, it's expensive, but the strategic prize is so big that it's worth it.
Okay, we've laid out a very compelling bull case. But a rally like that doesn't happen without risk. So let's talk about the bear case. What could go wrong?
The number one risk is just pure execution. It's one thing to have a plan to go from a mine to a high-tech magnet producer. It's another thing to actually do it.
And these are complex facilities. The magnetics facility, the heavy rare earth circuits.
Extremely complex. Any significant delay means those high costs continue to bleed for longer, and it pushes out that all-important 2026 profitability target. That would really hurt the stock.
And we have to come back to that valuation. That's my biggest hang-up. A forward price-to-sales multiple around 23 or 24, when the industry average is like 1.4.
It's a huge premium, no doubt about it.
The market is pricing in near perfection. Any stumble, any missed target is going to get punished hard because there's just no room for error at this valuation.
You're right. It's being valued like a strategic tech company, not a miner.
And there's one other thing the bears always point to: insider selling.
Yep. The CEO and CFO sold a significant amount of stock recently, over $43 million worth in the last 90 days.
That's a lot.
It is. Now, you can argue it's just them cashing in after a huge run-up, which is normal, but it's an overhang. It definitely makes you pause and wonder.
Okay, so for someone watching this story unfold, what are the key things to look for in the next, say, 3 months?
The biggest one by far is the Q4 2025 earnings report. That's due in early February 2026.
Because that's the first quarter with the DoD price floor in effect.
Exactly. It's the first real test. If they deliver on that return to profitability, it validates the whole thesis. If they don't, well, that's a problem.
And beyond the earnings number itself.
We need to see real, tangible progress updates on the 10X magnetics facility. Are they qualifying with customers? Are they hitting volume targets? And, just keep an eye on the geopolitical landscape. Any event that reinforces the need for a domestic supply chain is a tailwind for them.
So to wrap it all up.
To summarize, I'd say MP Materials is still a high-risk, high-reward investment. But it has moved past being just a speculative idea. It's now in the execution phase, and those government contracts act as a pretty strong floor, limiting the downside.
So this is not a short-term trade. This is for someone with a longer time horizon.
Absolutely. This is a multi-year hold, 2 to 4 years minimum. You need that time to see the full earnings power of all these facilities once they're completely ramped up. You're betting on a massive strategic industrial project. And here's a final thought for you to consider. This company represents a vital national security priority. Considering the aggressive investment and the strategic policy-backed moat, what is the fair price for securing a vital part of the nation's supply chain? Does a high premium inherently justify the risk when the alternative is supply dependence on geopolitical rivals?
That wraps up our analysis for today. If you found this discussion valuable, please hit that subscribe button to keep up with all our stock analysis.